We're an index conglomerate that builds the leading vol indices for Bitcoin, Ethereum, Solana, rates indices, and soon more. We have been featured in CoinDesk, The Block, Moody's, and much more, and we're just getting started.
When people want to know what's going on, they look at your indices. You guys are really the gold standard.
I have experience in the TradFi markets. I studied finance and economics, and the team is world-class, and we're really proud of what we've built. The market structure is evolving. It's a really, really exciting time in crypto, and the derivatives landscape is transforming. We're really excited to be this index conglomerate that has the leading vol index franchise in crypto, but also this leading emerging rates index franchise, and really excited about where we're headed.
What's to stop someone from copying your index?
I think it really comes down to first mover advantage, integrations, mind share. We're focused on out executing, moving faster than TradFi incumbents. Timing's great, the team's great, the product's great, and so it's kind of a confluence of different factors which really have propelled Volmex to new heights. I'm quite excited about it.
What does Volmex look like in 5 years?
We could look like a mini version of MSCI, a $42 billion public company. From a product point of view, we should be widely adopted by all of the financial media, covering the vol indices, covering the rates indices, all of the exchanges across every different product wrapper. We have a very big vision.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Cole Kennelly, the entrepreneur, Web3 expert, and crypto finance pioneer. You are the founder and CEO of Volmex, the leading platform for analyzing and trading crypto market volatility, and the team behind the first volatility indices for both Bitcoin and Ethereum. You believe that volatility is the lifeblood of trading, not something to fear, but a force to harness and understand. You said that in traditional markets, volatility is an entire asset class, yet in crypto, it remains largely untapped. Volmex aims to change all that by giving individuals and institutions the tools to analyze, hedge, and trade volatility with the same sophistication as that in legacy finance. Ultimately, you believe that as crypto matures into a global financial layer, volatility products won't just be useful, they'll be essential. With Volmex, you're building the infrastructure to navigate and unlock a new frontier in digital asset markets. Cole, welcome to London Real in Dubai.
Thanks for having me, Brian. Great to be here.
Great to have you. I want to start by saying that Volmex is one of our portfolio companies here at London Real Ventures, the world's first media-powered investment firm, where our mission is to transform the world by investing in cutting-edge Web3 and AI companies while giving our partners marketing exposure across the London Real media platforms and academies. We heighten awareness, create customers, and build communities by leveraging our global audience and extensive network. Cole, super excited to be part of this journey with you. So let's jump in. What is Volmex?
Again, really great to be here. Thanks for having me. So Volmex Volmex Labs is a company which builds the first Bitcoin, Ethereum, Solana implied volatility indices. In the US equity market, the VIX index is a ubiquitous financial media indicator that tracks fear in the U.S. equity markets. We've built a very similar index for the crypto market that tracks fear in the crypto markets for Bitcoin, Ethereum, Solana. We have the first tradable perpetual future product on this index in collaboration with Bitfinex, which is a sister company of Tether. And we have other indices in our wheelhouse, including the Volmex Prime Rate Index family, which track DeFi lending rates, funding rates, and a mix of both. And so we're an index conglomerate that builds the leading vol indices for Bitcoin, Ethereum, Solana, rates indices, and soon more. Our indices have been featured in CoinDesk, The Block, Moody's, and much more, and we're just getting started.
And if I go onto like CoinMarketCap right now, which is probably one of the most popular sites for tracking prices, and I drill in, boom, your indices are there. I mean, these are like industry standard. When people want to know what's going on, they look at your indices. And it's not simple to create an index. You know, it's something that you really have that proprietary technology to create that and maintain it. And you guys are really the gold standard.
Absolutely. If you go to TradingView and you search for Bitcoin implied, Ethereum implied, Solana implied, we're the top result. So that's based on keyword searches. And so we're really proud of that. That's been a major partnership for us to get on TradingView a couple of years back and really build, this standard, as you say, for Bitcoin vol, Ethereum vol indices. If you go to CoinMarketCap, we have a whole section in the mobile app that features Volmex. We're integrated in their Fear and Greed Index. We're one of the 5 components of that in the other, social media and other things they use. And then we also are featured in the CoinMarketCap web app. And so there's a whole section on Volmex, and you can see the Fear and Greed as well there. And so, we have a bunch of integrations in the pipeline. We'd like to be on Bloomberg and things like Refinitiv, and really exciting progress we've built, progress we've made. And, we have built a really solid foundation that's kind of at this inflection point where, we're really about to cross the chasm and kind of, further materialize this, volatility index and rates index standard that we've built.
You mentioned Bloomberg. You're also based in New York City, and we're also at a time where obviously BlackRock's doing massive volumes of the futures. They're also putting things on chain with RWAs and securities. And you have experience in that traditional financial markets, and now you're talking about bringing these volatility indices off of like a CoinMarketCap and into a Bloomberg. I mean, this is a pretty exciting time, and it seems like you're the guy to do it because you're not just a Web3 guy.
Yeah, so I've been following the options market my entire life. My dad actually works at a U.S. equity options exchange and has spent about 30 years working at a couple different U.S. equity options exchanges. And so my entire life followed vol products, options. I've been working in crypto startups for about 6 years, and so I was a second employee, first business hire at a staking company that's now part of Kraken. And so, I have experience in the TradFi markets. I studied finance and economics, and as mentioned, my dad works in the U.S. equity industry, as well as, crypto startups. And so our team comes from a number of other companies, including IMC Trading, which is one of the biggest and fastest option market making firms in the U.S. equity market. My colleague KG is a PhD. We have a number of other colleagues who have worked at companies like Lyra, Derive, Consensus, and others. And so the team is world-class, and we're really proud of what we've built.
Do you ever look back and say, wow, this timing seems, uncannily perfect? Because right as now the crypto market's getting big, it's also being adopted by TradFi, and you guys are right there.
Timing's great, the team's great, the product's great, and so it's kind of a confluence of different factors which really have propelled, BVIV and the Volmex indices to, continued new heights. And so we're really excited about what we've built, and definitely. I think as you said, the BlackRock ETF options have been very prolific in the last couple of months. They're actually about 55% of Deribit, the largest offshore options exchange. And so the market's evolving, the market structure's evolving. It's a really, really exciting time in crypto, and the derivatives landscape is transforming.
Let's talk about volatility indexes and implied volatility. That's something a lot of people don't understand, but it's such an important marker in traditional financial markets and on Wall Street. And I was wondering, how do you try to explain to people what implied volatility is? Because, like you said, it really kind of tracks the fear in the market, which is something everybody wants to know. And it's something that is, in crypto, there's a lot of fear and a lot of greed. So how do you start having that conversation to explain to people what it is and why they need to be watching it?
So the BVIV index, and we have a number of other indices around the BVIV index, the entire term structure, but the core BVIV index is a 30-day implied volatility index, very analogous to the VIX index in the U.S. equity market. And so BVIV basically uses order book options data to price this, 30-day implied vol index. It's looking out 30 days and giving you an expectation of how volatile the market is going to be over the next 30 days. And so the BVIV index is effectively how much the market is going to move. You can get the implied, standard deviation move from this implied move over the next day or 7 days or 30 days from our different indices. And so basically, when the market is very fearful, the BVIV index tends to always spike. So it's a very good tool for diversification and hedging the products that are linked to it. Also a very powerful indicator, that's tracked on TradingView, CoinMarketCap, and The Block, and others. And so really it's this look into the future of the crypto market, the future price movements and expected volatility. And so the VIX index has earned its nickname, the fear index in the U.S. equity market. The BVIV index has a very similar property. Although crypto vol is a little bit different, when the market is also bullish, it can also see positive spot vol correlation. So very negatively correlated in times of fear, but also potentially positively correlated in times of greed. And so crypto markets moving around a lot, or the market is expected to move around a lot, the BVIV index tends to increase.
Interesting. And number-wise, what's the kind of range that it's usually in, the BVIV? Is it kind of like, I guess, is it floored at 0? Does it go up to like 120? And how does that compare with, say, an equity index, volatility-wise?
Yeah, so BVIV's currently about 50. It actually made a low from the last, since July of 2024 is a recent low. But, in the recent market movements where, a couple months back, the market saw some bearish price action, BVIV, spiked to 80 or so. And so I believe in the FTX crash was around the time we first started publishing this new methodology. It spiked to, I think, 120 or so. And so in times of fear, you might see it, above 80 or even 100. And then, it has a very persistent mean reversion tendency, right? So when the market is calming down after these big moves, you can see it come back to sort of some long-term, medium-term, short-term mean. And so it is a very great indicator for understanding, expected vol in the market. But it's, you can think it's, unless crypto market blows up and goes to zero and just disappears entirely, it can never really go to zero. It's kind of always going to mean revert to some sort of mean. And so it's a very unique asset. It's different from, Bitcoin itself or Ethereum or Solana. It has some different properties.
That's very cool. And the VIX index, when you're looking at just equities, that's significantly lower, right? What kind of numbers are usually on that?
So the VIX, is typically around, it seems to be 15, 20, in times of, macro uncertainty with tariff uncertainty, things like that. It's gotten up to, 25, 30, even 50 in the last month or so, which is, one of the biggest moves in the VIX history. And so you can think of the crypto market as juxtaposing BVIV and VIX is substantially more volatile, right? So BVIV's at 50, 60, 70, VIX is at 20. You can say it's multiples more volatile. And we also have the EVIV index, which is the Ethereum 30-day implied vol index. The EVIV index is, there's a pretty large delta between the BVIV and EVIV index. So BVIV 50 right now, I believe EVIV is at 75, 70. And so EVIV Ethereum is substantially more volatile than Bitcoin. And then we actually have a Solana 14-day implied vol index that is currently around, I think, 100. And so we do have a bunch of other indices in the BVIV, EVIV, SVIV family. We have a BVIV 1 day, just like there's a BVIV, a VIX 1 day index. And so there's a lot of stuff you can do with our indices. And we've been finding a lot of product market fit. A lot of traders, investors across the retail, institutional segments of the market are very interested in using the product.
And so, so with the volatility index, you're not betting on whether it's going to go up or down. You're basically buying it because you think the volatility is going to increase.
Yes, I mean, if you're using the derivatives that are linked to BVIV, you think that there's going to be a big move in the market. Maybe you think that the market's uncertain with tariff uncertainty, something like this. BVIV might go from 50 to 80. And so the BVIV linked derivatives can be used to hedge the next couple weeks or next couple days of price action. And so, if you're using it for speculation, that's for hedging. That may be how you're using it. You can also use it in a speculative way with various strategies. If it sees a big move up, there's going to be some sort of mean reversion. You could play the mean reversion. Maybe it goes back to the 50 after the 80 move. And so it's a very versatile product. It can be used as an indicator. It can be used for diversifying and hedging. It can also be used for speculation and various strategies. And so very unique product with very unique tendencies that are not found in normal spot crypto assets.
I think your last point is really important for people to understand because I started on Wall Street in 1993 and I was trading a fixed income book, a derivatives book. It was a swap book. And all I looked at all day was government bonds, yields, and these LIBOR curve yields. But we would watch the VIX, which was wild because the VIX was telling about the volatility of the stock market, which had nothing really to do with what we were doing, but we always kept our eye on it because it was always telling us kind of what the global market was doing and how that ultimately might affect even fixed income. And so it's really an incredible metric. It's a unique metric because we really didn't have options priced on exchanges and probably until the late 70s, 80s, and then implied volatility. It's a fairly newish concept, I would say, in financial markets, but really, really powerful. And like you said, it does so many different things. I actually didn't know it was part of the Fear and Greed Index. And that's wild.
For CoinMarketCap, it is. It's one of the aspects of it.
Interesting.
I guess the Fear and Greed Index is something that's been kind of popularized in the crypto market.
Yeah.
There's kind of a legacy version, and we've actually helped CoinMarketCap develop this, their version of it, which uses BVIV, which is, we think, a great, aspect to be creating something like this.
Yeah, that's super cool. So Bitcoin volatility is here. Ethereum will be higher. Solana will be higher. Do you have plans to introduce other crypto volatility indices, or I guess you probably need them in the biggest, deepest markets for that to make sense?
Yeah, so we would love to have vol indices on the leading crypto assets, things like AVAX, things like Ripple.
Yeah.
One prerequisite is we need crypto options deep in liquid markets. So things like Deribit, OKX, exchanges like Deribit, OKX are integrated in the BVIV index methodology. And so as these exchanges like Deribit, OKX support more pairs and options markets, we will definitely look to integrating these type of things.
Okay, that's fantastic. Really interesting. I think people need to take a deep dive on that, and anybody in crypto needs to keep your eye on these things. Where I'd say most people in crypto are just following the price of Bitcoin. And it's interesting, you say, Cole, is that I watch Bitcoin and Ethereum prices all the time, but I would not have guessed that Ethereum was 30 points higher on the vol index. Because as a human brain, you can't really look at vol. It's hard to really understand vol. I can tell you what the price of Bitcoin is. I can tell you if it seems like it's moving, but I can't kind of inherently tell you that vol is more or less.
It's intuitive, right? Because ETH is a smaller asset, regardless of the technology. It's a smaller asset. It takes less amount of money to move it around, and so it makes sense that the delta there's actually a bit of a spread between eVIV, the Ethereum 30-day vol, and BVIV, Bitcoin 30-day vol. Actually, when the Bitcoin ETF approvals were going on, that spread narrowed, and actually Bitcoin vol flipped Ethereum vol. And so there's been some market microstructure things to pay attention to regarding this spread, but it's interesting. Typically, it makes sense that the eVIV actually is a bit above BVIV, and SVIV, Solana implied vol above eVIV. So,
What's it like when you go out, starting to talk to financial institutions like the Goldman Sachs of the world or the S&P 500s of the world, and you start to explain kind of what you're doing in crypto? Is it, in some ways, Cole, is it easier talking to them because they have a history of understanding that volatility is important in markets? Or are they also so new to the Web3 space that you have to kind of educate them?
I think with the introduction of things like the IBIT options and the new admin in the U.S. that's pretty favorable to crypto, the tone has kind of changed with big financial institutions. They're all trying to figure out what can be their big crypto products if they don't already have them, and so it feels like there's a very strong reception to just crypto in general, but also what we're doing at Volmex. On the other hand, anyone who's heard of the VIX index and has heard of Bitcoin should understand what we're doing at Volmex, right? We have other indices, but in terms of BVIV, it makes sense to them if they have heard of this concept of implied volatility, expected volatility, as well as the Bitcoin price, and then go to some of our tradable products like the Bitfinex BVIV perp. If you've heard of Binance and OKX and Bybit, this concept of a Bitcoin vol index perp is very intuitive as well. And so we find that TradFi firms or traditional finance in the U.S. and broadly are very receptive to what we're doing at Volmex, but also retail and pro-tail traders. And so it's a very versatile product in terms of the users that it serves, traders, investors across retail, institutional, pro-tail segments.
How do you get out of a rat race? How do you create wealth not only for yourself, but also for the generations to come after?
I am absolutely amazed with the quality of companies that we're getting exposure to.
We go on to Zoom calls with the innovators and the folks who are building new applications in metaverse, blockchain, artificial intelligence, decentralized finance.
What's going on, everybody? Thumbs up if you can see me.
We are focusing on early stage investment.
And the quality of people that we're getting exposure to, whether it be Dan Tapiero with 1RT, Jason Ma from Open, Yatsu from Animoca.
It's been a phenomenal experience thus far. It has far exceeded my expectations.
We are focusing on cutting edge technologies.
I view it now as the best investment I've ever made. The upside I view is unlimited.
And as a retail investor, I would never get this exposure anywhere else outside of Investment Club.
See you in the investment club.
Now, this might be a naive question, but what's to stop someone from copying your index? You know, what's to stop someone from creating their own index? And what gives you kind of a moat? Or also, what is your proprietary technology or algorithms in actually creating that index? It sounds like it's much more complicated than, you know, just getting the implied vol of a 30-day option.
So we have a number of integrations which really help build a moat. So we have TradingView, CoinMarketCap, Bitfinex, the Block has our data on there, and we have a number of other exchanges that are in our pipeline. And so I think it really comes down to first mover advantage, integrations, mindshare. You know, we're constantly mentioned by CoinDesk. You know, in the last month or a month and a half, we've been featured in CoinDesk 2 or 3 times organically. We're just in the Block yesterday. All organic. We don't work with any PR firms. Fundstrat, which is, you know, Tom Lee's firm that started covering Bitcoin on CNBC at 5,000, recently published a letter, you know, an email about BVIV and made a video. You know, they've done this twice recently, and so we're finding that you know, there's a big moat that we've built around the integrations and the first mover advantage. Now we have a couple of you know, things in our back pocket, you know, IP wise, but I think it really comes down to first mover advantage, integrations, and then liquidity begets liquidity, right? So as we have more products coming online, as we work with some of these bigger exchanges, these, you know, top 5, top 10 exchanges, and get futures and other tradable products listed there, you know, momentum will just kind of beget more and more momentum, and you know, just kind of, you know, take it from there. And so we have some, you know, it really, you know, companies don't win because they have trademarks or patents. While we do value that, they win because the team and the product is superior, right? And so we're focused on out executing, moving faster than, you know, TradFi incumbents, you know, CFI, you know, incumbents, and you know, kind of just, you know, being the best product, and that's what we've done.
Okay, and based on that, what do your next 12 months look like? Like, what are the big milestones you have to hit to go where you want to go with Volmex?
I think the big thing for us is getting listed on a lot of the bigger exchanges in terms of having a BVIV future contract, BVIV options contracts. And so, you know, the usual suspects, you know, come to mind in the crypto market. And so getting listed on some of these bigger exchanges, making this really ubiquitous vol index standard that many different exchanges support, and it's, you know, widely adopted. And so being the most liquid and, you know, most widely adopted vol index product, which we've done so far, but also being very widely adopted in terms of financial media, continuing to accelerate, you know, the coverage that we're already getting from CoinDesk, The Block, and others, you know, getting on Bloomberg, getting on, you know, CNBC and Reuters. And so really just taking this to the next level. So the short answer is to keep doing what we're doing, but just do more of it and accelerate, you know, the BVIV index. And also we have these rates indices, which we can talk more about, which track things like DeFi lending rates and funding rates. And so, you know, we've built this sort of VIX index standard for the crypto market insofar as BVIV and EVIV and SVIV, but also, you know, getting into more, you know, becoming like an index conglomerate for the crypto space that has the leading vol index franchise, but also this leading rates index franchise that can allow, you know, trading desks and exchanges to list, you know, cool rates products. And so really excited about the potential of the rates indices. And then also another big thing is kind of making a push into the US market, right? A lot of these products are perpetual, they're offshore. You know, the IBIT options are kind of changing the market structure. We think that there's a major opportunity to kind of to enter the US market in a material way.
Okay. I want to get to the funding indices for sure. But you mentioned, IBIT and some of these ETFs. Now you can trade options on the ETFs. Well, how would you say overall has the adoption gone from traditional finance into crypto, and maybe specifically through the ETFs on Bitcoin, the ETFs on Ethereum? Is it going as fast as you thought it would go? Do you think it's going to continue to pick up speed? What other options do you see, ETFs do you see coming in the future, whether it's Ripple or Solana or the rest? And do you think it's just going to be much, much, much bigger than it is now? So
the Bitcoin ETFs have been very successful. The IBIT, the Fidelity ETF, the BlackRock ETF, the Fidelity ETF, the Grayscale ETF. Now there's options on a couple of them, specifically IBIT. So the IBIT options are now about 55% of open interest on Deribit. And so since November, they've grown prolifically, and they've become very, widely traded and very large as compared to the offshore crypto venues. And so I think that's really interesting. These are, now able to be traded on places like Robinhood, Interactive Brokers, Fidelity, Schwab. And so the traditional finance pipes and rails are now catering to crypto derivatives. And so, I think and speaking to the spot ETF growth, since the sort of tariff reversal a couple of weeks back, I think there's been 3 or 4 billion of inflows into the BlackRock ETFs. And so, and just broadly, but BlackRock being the biggest one. And so, I think there is sort of a very material, ETF inflows, since the launch of the product. I think there's tens of billions of dollars that have entered the products, these IBIT options and IBIT ETFs and others. But it's only accelerating, and it's getting a lot bigger. So IBIT options are very big. It's really very interesting that it's a winner take most or winner take all market. The other ETF options are not doing nearly as well as IBIT. And so actually, I think last week, and we've been publishing regular research about the IBIT options growth, how it maps to Deribit and the global crypto options market. It's very interesting. It's moving quite quickly, and if it keeps up this clip, it could surpass these offshore exchanges at some point in the coming weeks, months, and next year or two.
Okay, I didn't know that had grown so fast. Because when you put a big brand behind that and you're educating your clients, you can grab a big market share. I guess that's what BlackRock is doing here.
Yeah, basically, Robinhood, Interactive Brokers, Schwab, these option, brokers have tons of users, right? Interactive Brokers is very famous, and the others I mentioned. Ultimately disseminating these products across these venues which have prolific and massive user bases is just, grows at an exponential pace, right? And so the OKXs, the Binances, the Deribits of the world have done amazing work. But it's really interesting to see how the U.S. capital markets infrastructure is now adopting crypto and making it a really big thing, for traders and investors. And so, if you're a U.S. retail investor, if you're a U.S. institution that either has a mandate or just doesn't have the access to offshore products, these IBIT options represent a way to trade crypto vol, crypto options in a U.S. regulated product that is accessible, it's compliant, it's transparent, it's backed by clearinghouses, backed by big institutions, and so it's a strong counterparty, it's accessible. Things are only going to accelerate.
It's amazing. It's happening so fast. Talk to me about these, the prime rate indices, and explain what they are, maybe like as if we're 5-year-olds to people, because they're really important, but it's a concept that doesn't really exist in crypto, I would say.
So rates and interest rate products are the big whopper for financial institutions, right? They trade more than equities markets, more than commodities markets. And so it was very strange that we noticed that there was no kind of LIBOR, SOFR-esque index in the crypto market, right? So LIBOR was the famous, London interbank, rate index.
And how would you explain LIBOR to a crypto person? Because they probably wouldn't even know what that is. It's basically where you can borrow or lend money in a certain term, right? Or an asset in a certain term, right?
Basically a benchmark for lending. And so you can price credit against LIBOR and say, okay, Brian is a strong counterparty, I'm going to lend to him at LIBOR plus 5. And now after there was a problem with LIBOR, there's a new index, the SOFR, which is SOFR index, which has become sort of the new standard. And so they'll say I'll lend to Brian at SOFR plus 5 or SOFR plus 2. And
so it's a base rate, and then that plus 5 indicates my kind of credit risk on top of that. But it gives you this base lending rate that's very normal in finance, but kind of doesn't exist in crypto because crypto is born of assets and kind of asset prices.
Yeah, so we've built the VIX index standard for Bitcoin. We realized we had this massive distribution insofar as we're on TradingView, CoinMarketCap. We talked to some users about, just in casual conversations last year, and they were like, hey, I'm pricing credit for my users and I'm basing it on SOFR. And they were like, this is a big trading desk. And they were like, well, SOFR is actually not a crypto thing, so this is a little bit clunky. And they're like, well, we could probably solve that with a product we build. And so we set out to build the Volmex prime rate indices, which are a family of 6 indices right now. We're actually, some alpha. We're going to launch the Solana, a couple of Solana indices for a VPR soon. And basically the Volmex prime rate indices track the cost cost of capital in the crypto market. And so the core of these is the Volmex Bitcoin DeFi lending rate index, which basically tracks the cost to borrow stablecoins on DeFi venues versus the cost of lending. And so it's basically the cost to borrow stables against your Bitcoin. And so, it's a really good benchmark index for like an OTC lending desk to say, okay, I'm going to lend against the BDLR plus 3 to Brian. Or, there's exchanges actually have come to us and said, we want to list futures on this. And so what started as sort of an OTC lending benchmark idea actually has evolved into sort of a tradable product that should soon be coming to the market. And so we have the DeFi lending rate index, then we have the funding rate indices, which track funding rates in CeFi space across OKX and Deribit and soon more. And so and then we have a third index called the Volmex prime rate index, which kind of weights these two former DeFi lending rate and the funding rate index at 50%. And so we have DeFi lending rate index, funding rate index, and Volmex prime rate index, which are all these interest rate rates benchmarks for the crypto space, which are truly unprecedented.
Yeah, that's very interesting. What would those look like? Like if I went in to look at, say, LIBOR rates and looked at those compared to, say, a BTC funding rate, what kind of numbers would those look like? What would that feel like? Are they significantly lower or higher? And maybe I'll ask why, or what does that imply about the market?
Well, so I'd need to pull up a couple metrics to check exactly, but the DeFi lending rate index is currently about 4.3%, and so that's basically the delta between borrowing your stable coins on an Aave, Morpho, Compound, sort of weighted average across those venues versus lending your Bitcoin. And so I do need to double check what the ETH DeFi lending rate is, but these are a bit higher than the in the TradFi space.
Okay. And that number in general, what does that tell me? Like if that 4.3% went to 0 or it went up to 10%, it kind of tells me kind of like the demand and the supplies of those assets relative to each other?
It kind of shows you the cost to borrow stablecoins in crypto. And so in previous bull cycles, you've noticed that when the market gets very bullish, there's a very strong demand for leverage. And so effectively this rate could increase when the market is highly levered. And so it's kind of the cost to borrow, the cost of capital in the ecosystem. And so it's a very good proxy for how much demand there is for leverage. And so we've actually just started publishing these in production a couple months back. And so there'll be, we can run some back tests and there'll be also just more historical data building up. But generally these give you sort of a benchmark of where the market's at in terms of, how, much demand there is for leverage in the system. And so as there's more and more track record, I think this will be, we can obviously, backfill and backtest data and stuff, but historical calculation. But I think this will be a very powerful metric for traders, investors that want to understand the cost to borrow stablecoins relative to what it was 3 months ago, and pricing, locking in sort of fixed rate, structures. And I think it's a very powerful precedent, a very powerful primitive.
Yeah, it's fascinating. Do you think one day, Cole, it might be part of the fear and greed index because it tells us kind of so much about what people are thinking might come?
It's an interesting question. We developed, the BVIV index, and it was integrated into the fear and greed index before these DeFi lending rate indexes and the Volmex prime rate family was live. But would be interesting to explore that. I think that's a good idea. I haven't thought about that actually. And
again, a lot of us remember like back in 21, when DeFi was big, you could lend out your stablecoins for 8%. And it was the line at the party when you were going to ask people about crypto, like how much money do you get in your savings account? I get like, at that time it was like 1% or 2%. And well, guess what? With crypto, you can get 8%. And that would get people's attention and be like, okay, what's going on here? Now that kind of collapsed when the crypto collapsed, but maybe that gives people a kind of an interesting example of why your index is really important. And it's something that it's really hard to track. Like, I know a lot of traders in crypto and a lot of whales and influencers, and not once have they come to me and said, Brian, did you see the lending rates on stables is going up or down? Like, they're just not using that, but they really could use it.
So they're on TradingView now. You can search BDLR, BVPR, BFR on TradingView.com, which has tens of millions of users, and add them to your watch list. And so,
Amazing.
We're finding a lot of people are interested in this. They should be on some more platforms soon. And as mentioned, they should be tradable at some point. And so, the CME has a very active SOFR market, right? You can trade futures on the SOFR index, which is the Tradify's equivalent of this type of product. The NYSE also has a very active SOFR market, or ICE. And so we think there's going to be an entire complex of rates products built around the Volmex prime rate index family, the BDLR and the other indices. And this is a very powerful idea and could be a massive franchise for Volmex.
I think it will be. When I got to that swap book at Bankers Trust in '93, I was trading Chicago Mercantile Exchange futures on LIBOR. And they had evolved from a 3-month LIBOR contract to 1, 3 months forward, 6 months, 9 months, and then out to 10 years. And we used to trade these individual 40 different futures contracts, and it created this whole yield curve of borrowing and lending rates based on LIBOR. And it was an integral part of most of the bank's business. Like you said, people don't understand fixed income is 10x bigger, I think, maybe roughly, than some of the other markets. So yeah, this on Bitcoin, this is what institutions want and need. Yeah.
I totally agree. I think that's a really interesting experience, having traded, LIBOR futures. It's interesting. The crypto credit market kind of evolved a lot from the last cycle, right? So last cycle, there was entities like BlockFi and Genesis, which eventually inevitably had problems when, that sort of black box for lending sort of had, insolvencies and whatnot. And so now DeFi, makes it, so that, you can automate that lending process. And actually DeFi is kind of one of the first sectors to fully flip the, lending business in CeFi. But I think with the, the introduction of folks like, Cantor Fitzgerald, who's expressed interest in building a Bitcoin lending business, and maybe some of the other, GSIBs, big banks, as the crypto credit market comes back and the, lending is more prevalent in crypto, I think the BVPR family will find a lot of users in, folks that want to use it as a benchmark, folks that want to build structured products and structures off of it, tradable products on exchanges, just track it on TradingView or hopefully soon Bloomberg and others. And so, I think it's a really powerful idea. And, so we're really excited to be this kind of, index conglomerate that has the leading vol index franchise in crypto, but also this leading emerging rates index franchise, and really excited about where we're headed.
You mentioned Cantor, and now we've got, Howard Lutnick, former Cantor, I guess, in the White House. You see the Trump administration, we see 2 stablecoin acts, we see the SEC, new chairman, a lot of lawsuits being dropped. You've been in the States developing Volmex in a completely different administration. What's that change been like? How does it feel for you? Do you remain super bullish, kind of like you mentioned, earlier, or how do you feel about the future?
So I really believe in crypto long term, and always have been, very bullish on crypto. So I'll caveat that, I'm a true believer in what this tech can offer for the world, and the products that are, built with crypto. But there's been a very visible sentiment shift, I think, in the US with the new administration. Now the Bitcoin price is slightly lower than it was, in January 20th. But I think that, the Biden administration was very hostile towards crypto. And obviously the Trump administration is not perfect and is still just getting started, but is a lot more favorable to crypto entrepreneurs. Now, that's not, other industries might feel like the tariffs might, have negative, externalities on their business, and that might be very true. And, I feel bad about that, and we'll see what happens and how it plays out in the long term. I think it's too early to tell, or too early to, feel bad about it. But I think it's been positive for crypto. Crypto was in, I was just talking to my colleague earlier about this, in the last administration, there was basically a lawfare against the crypto companies. Coinbase, one of the best actors that invests the most in compliance. And
Peter Thiel took $500,000 and turned it into $1 billion using the exact same techniques we're using inside the investment club. He met a CEO, his name was Zuckerberg. He pitched him the deal and he said, okay, I'll give you $500,000. Mark went public and sold the shares to people like you. Well, what happened to Peter? Well, he exited and got a 2,300x return. The wealthy invest in early stage companies, folks. The public markets are for suckers. It's a rigged game. By the way, this happens in crypto as well. It's called pre-sale tokens. This is Solana. Does anybody know this chain? They sold pre-sale tokens for 4 cents. And you can see the date on there, April 5th, 2018. Look at Solana today, folks. That thing's up over 1,000x. The media and Wall Street and all these hype people get you to buy the top. Meanwhile, they put their clients in at the bottom and they use you for liquidity to make their clients rich. You can play this same game. You just have to have the financial education and the deal flow. That's it.
Is regulated, a public company. They had various lawsuits, Kraken, Robinhood, Solana, Gemini, all these different crypto actors, crypto companies that are above board had, investigations, lawsuits, Uniswap, the list goes on. And so the Biden administration, just full stop, was extremely adversarial to crypto. And I think regardless of, Trump, what's going on so far with, tariffs and some uncertainties and whatnot, it's a very visible, positive development for crypto. And I'm quite excited about it. So I think the next couple of years should be quite fruitful for crypto. And, I hope that there's no more sort of adversarial administrations.
Yeah, me too. It's been just amazing to watch. And I think one day we'll tell our grandkids about what it was like to live in an administration that was just really not very helpful and antagonistic versus this administration with so many players in that White House that own the asset, believe in the asset, and are building on the asset. Not to mention, World Liberty Financial that the Trump family kind of runs are super active in it. Not to mention the meme coins. I mean, they're all in on this. And I think we're going to see tons of progress, on the back of that. Talk to me about a token. Does Volmex need your own token? And if so, how does that help the company? How do you think about that? Because it's a really important decision for a company to make, because a lot of companies can be make or be a break based on the token and the execution.
So we have a real tangible business. We haven't announced or, any official plans for a token, but we will always be very careful about balancing a potential token with the core business, right? Because while a token can supercharge your brand, it's also, in a lot of cases for crypto companies, just purely a liability. And so we think that, launching a token could supercharge the brand in the way that the Binance brand has been supercharged by the BNB token. But also for every BNB, there's a graveyard of 1,000 other, projects and tokens that, had a bad outcome. And so for now, we're just focused on growing, the integrations, getting listed on some of the bigger exchanges. And I think that I am a true believer, as mentioned in, the last question, last point, in crypto. I think that, crypto economics can really, and the technology can, is very powerful. It can align, users, supercharge brands. And so I think that it could be a good conduit for this next, continued phase of growth, but we need to be very careful about the execution, and we have a lot to lose, right? We've been working on this for about 4 years. We've built a tremendous brand up. And so we'd rather just not launch a token than do a token badly. And so it's something maybe we share more on later.
Isn't it interesting how a token can be a real liability? And 4 years ago in the last cycle, we would probably be shocked for someone to tell you that, because we would see, the Uniswaps and the Aves, and it was just all value add. But now you see a bad token launch bring down sometimes a great business with cash flow. And so, but a poor token launch can make it to where no one wants to touch it,
Yeah, it's really interesting. I think the playbook's still being written. I think you'll see a lot of, in the next 2, 5, 10 years, we'll see real businesses that launch tokens, and there's kind of a playbook to, use the token in a compliant way to grow the business, but also align the users. And there's some sort of, equity token structure. But I think companies, it's not really in my sector, but I think, Pump Fund is really interesting, right? They're making a tremendous amount of revenue. They haven't launched a token yet. Maybe if they launch a token, it could have went badly. I'm sure maybe they'll launch a token in the future. I don't have any information, but I suspect they could. And so they're being very careful. And so if they launch the token the wrong way, they could tip the balance or they're,
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.
Dubai real estate is exploding, and the biggest money is being made where almost nobody is looking, in premium luxury transformation projects that have historically delivered 40 to 90% annual returns. That is incredible. For years, these opportunities were locked inside private networks. You never saw them. You never had access until now. I've spent 15 years on Wall Street and 5 years studying Dubai up close. And today, for the first time ever, you can invest directly alongside my team. We have just received a brand new project with real potential for outsized returns. And early allocations always fill fast. Click the link and apply now. Your opportunity starts today.